You are listening to chartingwealth.com for Friday, the 5th of August, 2016. We are on the road today, so we are coming to you from an undisclosed location. Hopefully, the internet and everything will work fine for us. We're posting this as rapidly as we can. Let's jump right into the markets and do this quickly and well. We always start with IYY on our 2-day chart. What do we see on that 2-day chart? Well, the market was technically up for the day, 0.06%, so barely up, but technically up. What are we seeing candle-wise? Well, with the indicators overall, we're seeing two down candles. We're seeing a spinning top on the candle ending on the 2nd of August, followed by the candle ending on the 4th of August. Another spinning top, really more of just a down candle, a little bit of an up move, but mostly down movement with a down wick. When I say up move, I mean a little bit of an up wick on the red solid candle. Those of you who follow the kinds of candlesticks we use, the Heikin Ashi, you know that that is confirmed down movement there. Now, we have the derivative oscillator continuing to lose energy. We also see that the MACD is approaching the signal line going down. So, again, confirmed moves as far as the candles go, not a crossover going down. So no confirmed movement. We still call the market up. However, two down candles, we have broken the 2-day trend line. Now let's look at our 4-hour chart, see what we see. Well, we see that we're still in again, a prolonged down move on this 4-hour chart. Crossed over going down back on the 19th of July. The market really was slipping sideways at that point and then started really moving down on the 2nd and 3rd of August and then has been trying to recover since then. Derivative oscillator has lost some of its down energy, but we still don't have a crossover on our MACD. Now, if that does occur and if the market continues to stay up, might be an entry point, but we're below our 2-day trend line, as we said earlier, and we are waiting for a confirmed down move, but haven't had it yet in our big chart. Okay, let's look at back to the 2-day chart. Let's take a glance at the S&P 500. Looks very similar to the total market. Again, down candles for the last 2-day candles, 4 days of down movement. Still haven't had a crossover yet on the MACD, but it does seem to be converging. Derivative oscillators losing a lot of its energy. If we look at our 4-hour chart, what do we see? Looks somewhat similar. It has been moving up for the last 2 days. A strong up movement for the last day and a half. The market was technically up 0.11%, but we still haven't had that crossover yet. Just like the total market, the S&P 500 has been moving down on the 4-hour chart since the 19th of July. And again, when we say down, when you really look at that chart and we look at the Bollinger Bands, we can see that the movement has really narrowed as the market has slid sideways. Sideways sliding means lack of volatility. That's why the Bollinger Bands have gotten so close together. Still haven't had that crossover going up. And if we do, and we have a breakout of those Bollinger Bands and the market bounds back up again, and remember, the market is controlled by who knows what. Has nothing to do with how well or bad the economy's doing. I guess it just has to do with the free money the banks are printing. That is, the central banks across the world. Okay. Lastly, we're going to range back out to as far as our indexes go, then we'll get to gold. But the last index we look at is QQQ. What is that? Well, that, of course, is the NASDAQ 100. It was up the most of the 3 indexes over the course of Thursday the 4th. It was actually up 0.29%. What do we see when we look at the Heikin Ashi candlestick and the charts, however, on the 2-day chart? We see that we're still above the 2-day trend line. Again, the NASDAQ has been our strongest chart. We do have an open red box candle I'm trying to see if it's a spinning top. It's hard to call what it is. It's an open red box candle, meaning a lot of indecision. It's not a filled in red down candle. So lots of indecision. All the movement that we see over the last 2 days was contained in just the up movement on the 2-day chart ending on the 2nd of August. So not a lot of movement either way. Still above the 2-day trend line, derivative oscillator losing energy. MACD and the signal line are pretty much the same, both still going up. If we look at our 4-hour chart, what do we see? Well, the 4-hour chart is again trying to recover, continuing to move up. It has not yet recovered from where the down movement started back on the 2nd, but it is trying its darndest to do that. Still hasn't crossed over going up. Derivative oscillator is losing energy. Some of you had jumped into those moves earlier and did very well in the Qs. If you did not get out or you sold half your position as the market started crashing there on the 2nd, hopefully you've continued to monitor this and are probably feeling pretty good about the fact that the candles at least are moving up. Please be cautious though. Derivative oscillator is still very negative, and the 4-hour chart is still crossed over going down, and the movement of the MACD and the signal line is down. So just be aware of that. Okay, back to the 2-day chart. Lastly, we shall go to gold. Oh, and for those of you wanting to know about getting into a Qs trade, lastly, if it does cross back over going up, you can sure look to do that. I know there were probably some of you after the down moves on the 2nd probably saw those green candles forming and jumped back in. You would have done good so far, but I do urge caution. Okay, lastly, we're going to go to the 2-day chart. We're going to take a look at gold. Gold is up 0.17% for the day. Gold is trying and looks like it succeeded in crossing over on the 2-day chart that ended on the 4th of August, but just barely. That's a hard one to hold on to. Derivative oscillators still in the negative. Gold has technically, and again, it could just as easily flip back over, but it has technically crossed over going up. Feel a lot better when the derivative oscillator flips over on gold. Gold was up 0.17% for the day, like we said. Let's check out what's going on. We see that gold, of course, crossed over going up on the 4-hour chart back on the 27th, and our 4-hour charts continued to be good to us. I know some of you have started trading again just using the 4-hour chart, and for the last few weeks, it has been an accurate one to go by. So if you're doing that, pay attention as a backup might occur on the big chart that is crossing over going up, or hopefully will confirm that with the derivative oscillator crossing over. If indeed your short chart crosses over going down, again, watch that. Be careful. Might present a down opportunity, an inverse fund opportunity if you want to practice trading the short chart on gold. Remember, it works, when the market is trending. When the market starts sliding sideways, that 4-hour chart does not work for gold. We saw that at the beginning of the year. Folks, that is where we ended up as I sit here sweating, not in the usual place, in the comfort chair, the power chair, while I'm doing the podcast for you at headquarters, out traveling on the road. Always a pleasure to bring these podcasts to you. We're going to be getting them uploaded right now and out to everyone. We so appreciate you. If you want to help us out and appreciate what we do go to the YouTube channel and subscribe. We're getting closer every day to 1,000 subscribers. We're in the 800s now. Of course, thousands listen every week. But you hardcore subscribers, when we hit 1,000, you will be receiving your proprietary broadcasts as your reward for subscribing. So please do that. Also, please go to iTunes, subscribe to our podcast there, and give us a 5-star rating. You help us in the metrics. You've already made us as high as like 6 or 7 worldwide in stock market podcasts. Of course, we want to keep going up. We want to keep sharing the word and the information. Thank you so much for being with us. You have problems, questions, concerns, want to get our daily newsletter email, which is basically this video podcast. It comes in video to you if you subscribe at chartingwealth.com. Thank you so much. Let us hear from you. Know what else you need. Great trainings at the website and also on the YouTube channel, Charting Wealth, of course. We wish you the best. God bless from chartingwealth.com.